Hello everyone, this is Teddy Keckset from Forex Trading Unlocked, and we are here on September the 23rd, 2020 with a live Forex breakdown for you. So real quick, we want to pull up our disclaimer just to remind you this webinar is for illustrative and educational purposes only. That is all. So we're going to be talking about the major currencies versus the dollar. We got a lot to talk about. There's all kinds of signals going on. So we will get into that right now. So first of all, we are at the Forex-trading-unlock.com website. We're going to go up to the top right corner here to the Market Analysis and Educational tab. Hit the Forex Trading Unlocked workstation. And now it is loading up that page, and we are going to dissect what is going on with the dollar index and the currencies and give you a good indication about how the dollar is becoming a short-term bull. So we're going to get rid of that. We don't need the volume up and stuff. Okay, so we have a nice, clear, clean chart. The Euro US dollar, as you can see, is in a little bit of a sell-off. It's been a little choppy the last, half an hour or so, It's been kind of bobbling between 116.80 and just made a nice little move lower, and then now it's bouncing back. I think in the short run you might see a little dollar bounce or a bounce against the dollar, just to take a little profits because it's been a little tear. Now let's take a look at the dollar index. It had a breakout to the upside 2 days ago, and it was confirmed yesterday with a higher close. We have a reverse head and shoulders. If you can notice, let's see, we'll take this arrow. Here is a shoulder here, and then we have here is a head, and then here is the shoulder that has just been formed right there, and we have this nice little neckline that had been breached as well. So as you can see, the confirmation has been made. Let's go back to the Euro US dollar. The Euro US dollar looks like an upside down dollar index chart. That's because the euro is the biggest component in the dollar index. So often they run very similar in how they look, at least in the short run for a little bit. So the Euro US dollar right now is slightly lower on the day, coming off of its lows. And like I said, I think that now that the U.S. markets are open and heading into their mid-morning trade, the European markets are shutting down. Asia's obviously done for the day. We are looking at just I think the profit-taking bounce that's most likely set up to have happen right now. So I'd be very cautious buying into this break right now, but also I'd be very leery of selling it, at least if you're a week short, because it's very likely that we're going to have a nice little bounce from this 116.82 area where we're at right now, maybe even back up to as high as 117.5. So be careful about being overzealous. We're not looking for a major crushing sell-off here, meaning a very strong bullish dollar moving around. So if there's any questions out there from our viewers, please don't be afraid to leave something in the chat so we can hear what's going on with you, or any questions you have about what's going on in the FX markets. So let's move on to our US dollar Swiss. Now the US dollar Swiss is also moving right in tandem with the Euro US dollar, except it has an inverse head and shoulders. This one looks more like the US dollar index as well. The Swiss also tends to look at times like the dollar index, because when it's running in tandem with the euro, they run very similar chart patterns. Right now, we have a confirmation as well for a bullish breakout. Now, you got to remember, these markets have been trending lower for quite some time, especially the US dollar Swiss. So it's long overdue for a little bounce, meaning a bullish move in the dollar. We're coming into quarter end expiration for the futures and options. There's also a lot of things going on with the interest rate environment that are making it harder and harder for other currencies to be so bullish against the dollar. These are fundamentals that have to do with the valuation of currencies versus one versus another, and the spreads that develop when they start to come out of whack. And because of where the dollar had been overstretched, there was some interest rate, because we are living in an interest rate environment where we know pretty much nobody's raising for quite some time, that gives us a very controlled outlook of one major variable in the currencies. So meaning, in other words, that's why we're seeing this short-term bounce in the dollar, where we've been going sideways. We set up this nice pattern. It's not that we're a major bull for the dollar, but it's just long overdue, and it's the contraction where with interest rates being where they're at, it's hard, unless there's any other major fundamental factors to come in that would be bearish to dollar. It's hard to beat it up any more than it has been, at least in the short run, especially when you have a sell-off in gold. And this is going to come to you when we get to some other currencies. Now we have the British pound, U.S. dollar. Now the pound, because of Brexit, which is going on, it's going to be hard for this one to be very strong for a while. Now, obviously, it's making its turn on the day. I think this is a profit-taking bounce. It wouldn't be out of like I said, just like we have the other currencies, to see a profit-taking move where the dollar is a little bearish for today, the rest of today, and into maybe the next couple days. That's not out of the realm of possibility. But overall, we're very bearish the pound right now because of the Brexit deadlines, things going on with within the UK, dealing with the Irish borders and things like that, where it's refueling a lot of old arguments and things that it just can't go well if it really gets fueled up. So you think we have turmoil in the United States? Well, they could have a lot of turmoil in the UK once again, but Brexit is all about maintaining sovereignty. They do have businesses flocking from the EU current countries to the UK, and they have to move there by the 31st of December. So that's a lot of action and a lot of things going on. So we'll have to be mindful of these things. I think eventually it may help the pound be bullish, but in the short run, I think it's more likely that the pound is going to be weighing on support more than testing and challenging resistance. So that right now gives us in the European trade zone a good idea of dollar strength. Now, all these other like the markets we're talking about, they had set highs and made lower move lows, lower move highs, and lower move lows. Now that those are all indicative of a bearish market, meaning bullish to dollar. The U.S. dollar Japanese yen, however, still remains in a free fall. It made a lower move low just a few sessions ago. Right now, currently, it's got a nice dollar bounce, but is not meaning that it's really bullish. It could just be a correction in itself for a little profit taking, because the U.S. dollar yen, even though it's making lower move lows and lower move highs, which is indicative of a bearish market, it's not in a severe sloping trend lower. So right now, it's kind of in that getting ready probably for more congestion than anything else. So be very mindful and leery of trying to jump on a dollar bull with the Japanese yen right now. In fact, I would wait more likely until every other currency becomes a bull again versus the dollar. That's probably when you'll see the U.S. dollar become a bull against the Japanese yen. Not that they're totally in an inverse relationship, but it tends to be a lot of what happens with the U.S. dollar yen when it comes to global reactions and trending globally. So right now, I think it's not the yen is not in tandem with the other currencies, unless we have something that really becomes very bearish to dollar or bullish to dollar. However, in this trade zone, we do have the Australian dollar, U.S. dollar, which has made a lower move high and lower move lows, confirming its desire to go lower. It also has a somewhat head and shoulder pattern that has formed, confirming a short-term change in trend. Remember, it's been a very long grinding rally that has been going on since the pandemic had its spike move back in February, March in the currencies. And now it's time for, especially as we head in the third quarter, and like I said, there's other reasons why the dollar is getting stronger, and with gold also having had its run and now starting to stabilize to even sell off, that's bearish for Australian dollar, U.S. dollar, which I think that's really what you're seeing here, and it's a reflection of now we have interest rates as well as gold prices, because Australia and New Zealand, which we'll get to next, are major gold producers. So when the price of gold obviously retreats, that makes the value of those currencies also a little bit weaker. So when people are surprised that the Australian dollar and New Zealand dollar bounced so quickly against the U.S. dollar back when the coronavirus volatility began back in February and March and April, you got to remember that, or be mindful of the fact that gold was in an extreme rally during this time. So it's very hard, even when the dollar was a bull at any point during that time, for it to be bullish versus the Australian dollar, U.S. dollar. once again, now with the interest rates pretty much frozen, and then there's also some other relationships with global interest rates, with those spreads giving it, laying credence to strength with the dollar, and then you couple that with the weakness in gold, then that gives us all the more reason to be a bear for the Australian dollar, US dollar, at least in the short run. So even this can help us to confirm more bearish or bullishness for the US dollar. As far as the US dollar index is concerned. Now let's look at the New Zealand dollar, US dollar. Now, unlike the Australian dollar, this market actually had set a higher move high just a few sessions back before making a lower move low. So this is technically in a neutral, not a bearish way yet. However, it's most likely the very beginnings of it, considering that not that they are totally in tandem, but when it comes to this gold move, interest rate move, and rally against the dollar, the New Zealand dollar has been very much in tandem with the Australian dollar. And you can see that this one also, where it didn't have a head and shoulders, it has broken the short-term trend and definitely has us off the rally path and more towards a neutral bias for the New Zealand dollar, US dollar. Now let's look at the US dollar, Canadian dollar. Oops, that's not a symbol. Let's see, US dollar. Oops. Okay, can't get the fingers to type right. Okay, so the US dollar Canada also has made a change in trend. You can see it's made a series of higher move highs, higher move lows, breaking out to the upside with a confirmation a couple sessions ago and continuing higher today. This is showing nice strength. This could just very well be a corrective move. This market still is in a longer-term bear market. This doesn't is not giving us quite the signals that the European, like the euro and the U.S. dollar, excuse me, the euro, the Swiss, or even the Australian dollar and New Zealand dollar. Those are giving us more reasons to be bearish in the short run, meaning bullish the dollar. U.S. dollar Canada. Well, that this one just happens to be turning and also helping to support that. So that means that the dollar strength, the flight to quality in the dollar is also helping. And then you got to remember too is that oil had been trending higher for months and has pretty much stabilized as of the past couple of weeks and has been bobbling back. Which so now you couple that with the interest rate, just like we were talking about with the other currencies around the world. Oil is also an issue when it comes to Canada. When oil is strong, the Canadian dollar is strong. When oil is weak, the Canadian dollar is weak. Not totally, but those are certainly underlying factors that right now give more reason for a U.S. dollar bull with the U.S. dollar Canada. Now we have the U.S. dollar Mexican peso. What's going on here? This one had set a lower move low, had been continuing its downward trend, and now it has bounced in a very, very big way, coming up a full peso within just the past few sessions. I would say be very leery of this one being an overall bull. We have been talking about this for a while. You probably can expect this market to stabilize somewhere between 20 pesos to the dollar and 23 pesos to the dollar, which just would have it trading in the range that we have. But right now, with dollar strength running around with the other markets, why not? You can definitely see it in some of your lesser currency crosses. U.S. dollar, Turkish lira, what a breakout this one has had over the past few weeks and definitely continues to run its course. I think that this is probably because of the coronavirus escalations in India. You got to remember, Turkey is in between. It's the part of the Silk Road. It's in between the Middle East and Asia, and with India exploding with coronavirus numbers, and then also in the Middle East, there's a lot of other issues too. That lays credence that probably the Turkish lira will continue to be bearish or bullish or bearish versus the dollar, meaning a dollar bull here. So there's some of your lesser currencies where the dollar right now is very strong. It's definitely pounding them. So let's go back to the euro US dollar. Let's see, do we have any questions? Hey, Johnny Garb, yo, what's up, man? How you doing? I'm doing well, man. It's been a very busy day. Just did our normal talk show segment on tfnn.com that we do every Wednesday at 9:40 Central Standard Time. And hey, we have a webinar today at 1 p.m. Central Standard Time that is going to be on eoption.com's website, and they will be streaming it. We'll be talking options, directional trading scenarios. And then also, for all of you guys that are tuned in right now, the book High Probable Japanese Candlestick Patterns, which I had written a few years back, is available currently on Amazon Kindle for free for 5 days for a short-term viewing period. So if you're a fast reader, you could read it for, I think you get it for a week or something like that, before it expires on the Kindle, whatever. So this is just a digital copy, but if you want to check out that book and learn how to trade those signal patterns and stuff like that, which if you have been paying attention to our webinar today, we did some of the patterns that we discussed began with Japanese candlestick patterns. In fact, here where the Euro US dollar, we have where the head is right here. Here is a Japanese candlestick pattern. We had a, what is it, also in a couple other ones. We had the British pound, US dollar. Back here, we had a high probable Japanese candlestick pattern there. And then we also had this little trading setup here is a continuation pattern that obviously has touched off new or move lows. We'll see how much, whether it bounces right now or not. And here's something that we can probably look at to kind of give you guys a little bit better of a skew as to how severe of a slide we may see with the pound. Remember, we were talking about Brexit. This is the one European currency that moves. It moves. The pound does not disappoint when it comes to directional movement when you really ride a trend. So if you look at where we're at right now, we are pretty much right here in the very first part of the Fibonacci retracement area. Let's look at this right here. So this is where we bottomed today. If you see how this is, we came off this little 0.382, our first little support notch. If this is coming off of our March-April low that we set when this volatility began, and we started this big bullish trend that we grinded higher. So if this is a Brexit trade, and let's just say that the Brexit trade is bearish, okay, hypothetically, we're just going to look at the bearish possibilities right now. It could be a bull. I don't see how, but you never know. Now, if you look at these Fibonacci levels, these really come in at really good pivot points for the market, meaning it's harmonically set, where these points leading up to the high, they're very good, good levels to watch out for. So a really nice bouncing point, I would say right now, for the pound US dollar is this $24.49 area, 24.5. I think that it's going to take a little bit longer to get down to this area right here, but I would say that probably if you look at today, and we'll use this as our guiding point, that between now and especially as we get towards the end of the year, I think you have a very good chance of us coming into this area here. And let me put this like this. So somewhere between now and I would say the middle of October, there's a good chance of us coming into this little area here. Now, I think that most likely you'll see something more like this. I don't think you're going to see anything very severe. I think it'll be like this. And then we might start to come into the end of the year, get a bounce as deals get made for Brexit. So we will, there we go, get rid of that nonsense. All right, so if this makes any sense to you, for the pound US dollar, we're looking for if this correction right now is sustainable, meaning that the US dollar strength is going to be with us for at least the next. Now, we're not looking for major moves here. We're just looking to be contained and trade within the range that's been set from this year so far. We're not looking for any major moves, but we are looking for some nice movement when I think this scenario could probably pan out. Let's see, Johnny Garb, let's see, what's going on with your Twitch? I've seen for the past week it's been on slideshows. Yeah, that's because we've been doing, we do our main videos we do for our proprietary customers that we don't release to the public. And we have been setting our new stream where how we bounce our programming, and we're trying to set it where we're going to have I'll be coming in every once in a while doing live segments for just the FX markets, but we're going to expand our content. So we're going to have, like, for instance, the book I told you about, lots of trades that we have that we've covered through our many webinars. We're going to go over how to implement those. That's why right now I have the little thing going on with the promotion, because of today's webinar with e-option. Going to be announcing it to them. Obviously, you guys are the first ones to hear about it. The few of you that are viewing us right now. Yeah, you can check that out on Amazon.com. So you can always go to our website, forex-trading-unlock.com, and if you go to products, courses, and services, it says right here on the bottom, high probable Japanese candlestick pattern. So that can get you to where you need to go. You can take a look at the book a little bit before you decide, but like I said, you can download it for free right now for the next 5 days. And we're going to start setting up webinars like that. We are going to start running some of our old educational blocks. We're going to schedule those in. We have a bunch of new webinars planned. And by the way, let me ask you guys a question that are out there, especially you, Johnny Garb. We're thinking about having next at the end of the month a fourth quarter Forex forecast webinar where we're going to specialize for 1 hour doing a major breakdown of the currencies. And we'll be doing stuff like, for instance, here, like let's the pound US dollar, just to give you a little taste of what I'm thinking about doing in a month or at the end of the month. So we have the pound US dollar, and we have this scenario here. So let's look at the pound versus, I always say the best indicator is always the market itself. So if you look at the pound US dollar right now, this is also very weak. And I mean, it's not getting quite the volatility that we would like as far as being clearly something to read, but this definitely is very weak. So now let's look at the British pound versus the Swiss. Now remember, the Swiss is one of our flight to quality currencies. Now here, this is interesting, where we see the Swiss falling against the dollar. We're seeing the Swiss also fall against the pound right now, meaning that the pound is starting to, looks like, set a bottom, but it's definitely at the bottom range of where it's been trading for a while. So this one here is still rather weak. We'll have to watch this as another indicator as we move forward for pound weakness, but I would expect that you're probably going to see this go more sideways over the next couple of weeks. But let's look at the British pound versus the Japanese yen. So here, look at this. It's been tanking like a rock. It's been trending lower, and I would think that you're probably going to see it at the most stabilize or continue to be in a bearish way. The velocity of this break is pretty strong. A correction is probably set to happen over the next few weeks, sometimes next couple months, but I don't see any very big thing, and this helps to support our pound breaking. So can you link the webinar in the chat? Absolutely, I can link the webinar in the chat. Let me get that for you right now. All right, let's see. We go to, I have it pulled up on my LinkedIn thing. So I'm going to my LinkedIn page for you, Johnny Garb, real quick. I'm going to pull up this link for you. Okay, here we go. Almost there. Yeah, I think you'll like this this webinar from that I'm doing for e-option. It's pretty good. We discuss stocks that are very popular with most people, so it's not like stuff that you're not going to be familiar with, and it's not very complicated. And yeah, I think you'll like it. So let's see. Here we go. All right, I'll put the link in for you here, and you can even get it off of eoption.com. Oh, this doesn't want me to paste it in there, so let me do it in here. Let's go to pull up the chat. Okay, all right, I'm getting it there for you, man. All right, here you go, Johnny. Okay, there you go. That should bring you to it. Let me double check it if this link is working. Looks like it's loading. Webinar registration. Yeah, that works. So Johnny Garb on the Twitch. There you go. I got you the link, and anyone else that's also here right now, you can see it as well. So there you go. So anyhow, so this is the Forex. Like I said, the webinar I'm thinking about for the end of the month. We will be focusing on all the major currencies for the fourth quarter ahead, which means we'll be talking about our expectations, as we'll be only a month away from the election. And this here, let's look at the pound versus the Australian dollar. So here's another one where it looks like it's kind of it's a little bullish right now in the short run, but it's just really in a bottoming phase. We're also talking about the Australian dollar here. So right now, short term, it looks like the pound may still get a little bounce. Like I said, it looks like we're going to get a little correction, a little reprieve. But then after that, I think it's going back to sideways action. So let's go back to the Euro US dollar, see what it's doing. So as we've been talking through this webinar, it's pretty much doing the same thing as it's been doing the past hour and a half. It's trading between $1.16 like 80 something and $1.16 60 something. So do you have any other questions, Johnny Garb? Any particular currency cross you want me to break down for you, or any other market? So another thing you guys want to pay attention to is when I did my segment for TFNN today, I talked a lot about how the currencies are affected by the interest rate markets. So, and there's a lot of things that are in play right now globally, whereas the U.S. rates, we know where they're at, and that's going to help the dollar remain a short-term, not necessarily big bull, raging bull, but it's going to be hard for a lot of the other currencies to gain a lot of ground unless we have some big major shakeup. So once again, I want to thank you guys for tuning in, and check out the book High Probable Japanese Candlestick Patterns, available on Kindle and paperback on Amazon.com. And like I said, for the next 5 days, 9/23/2020 today through the 27th, you'll be able to download that for free. Check it out, and also check out our webinar today at 1 p.m. Central Standard Time that we're doing for eoption.com. You can get the information on the link on the chat right now and sign up, or you can go to eoption.com and sign up through their educational thing for webinars. With that being said, I want to thank you guys very much.